Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 20th of April, 2022. This is episode number 2216. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, mild risk on sentiment, which was interesting. A lot of dramatic movement yesterday following this big rally, which was in the cards, but honestly, I'm completely wrong on the assessment, the trend that we are likely to push to 43, 34, 50 in ES. We played out the second scenario yesterday, plus some. But we did get Netflix earnings after the close yesterday, which really took it in the teeth. Netflix down currently 28% from yesterday's close, and the streamers with it. So Disney's down 4.4%, and there are others, Spotify and others that are Paramount's down as well, 5%. Warner Brothers down 3%. All of these are streaming type of entities, and they're all kind of moving in sympathy. The conference call yesterday with Netflix was very straightforward. They did lose a lot of subscribers, and people are expecting that they would start to make moves now to make sure that people aren't sharing subscriptions. But also, they explained that this is the kind of the hangover that takes place as the growth was during the pandemic was very unsustainable, and this is kind of the hangover for the markets opening back up. So that's caused a drag on because Netflix is a large component of the S&P as well, and especially the Nasdaq. That's kind of had its effect after the close yesterday, but we didn't pull back that far, and we are pushing highs again this morning. So risk on as a result, potentially as a result of the strong earnings this morning. We had some key figures before the market. Anthem came in and beat by 5%. Procter & Gamble beat by just 2%. Abbott Labs beat by 17.69%. That's quite a bit. Lithium Motors, 18%, and so on and so on. Pretty strong earnings. China left rates unchanged overnight. The expectation is that they would reduce them in this bid to continue with the stimulus. So that had a drag on Asia a little bit, and it kind of created a sideways trade through most of the session. But now the market just took off about an hour and a half ago, and it's quite bullish. We're opening in a gap in the S&P. We've moved away from some key balance areas, and it looks like we're gunning for 4,500. Turning our attention to the S&P. Oh, by the way, after the close, Tesla announces that's the key player. We get United Airlines, Tenet, Lam, Alcoa, and many others. Turning our attention to the S&P has traded 203,000 contracts. The inventory is 23% long. The overnight session built a lot of volume. We'll look at that in a minute. Built a lot of volume over yesterday's acceptance, and it's as breaking away. What we have is initiative buying in the overnight session. The range is relatively wide, 47.75. 47.75. Point of control of 44.7650. The point of control being at 44.7650, well above that 44.60 area, is kind of interesting. But in either case, we're coming in with 47 points of range. The crude oil has been completely sideways. Crude just really banging around, not doing anything. The range on crude is $103.96 down to $101.92, a $2 range or so, $2.04. and it's on the upper side of the range, up 1.19%, but really mainly sideways, and that's where we stand. Yesterday, just looking at what was expected real quick, really the way this was set up, again, one-time framing down on the daily, one-time framing down on the weekly, pretty clear tests in the overnight session of that 92, 94 area, leaving the mid and VWAP behind. A very weak low on the session at 71.75, and it just, I don't know what to tell you. It's really just a great setup for a continuation short with a target of 34, as is scenario 1. I mean, that's how the probabilities would play. The secondary scenario is a pullback to finish the job here, was a pullback, but then we would get an impulse and push to 29. Thing is, the range for scenario 2 is okay, but we didn't get a pullback. We basically took off right from the open. We essentially just held the opening price mainly and squeezed, and we ended up in this key resistance area before the market stalled. That area is 44.60. So yesterday, scenario 2 in play. Again, I'm not going to make excuses, but I found it particularly difficult. Actually, I experienced some frustration yesterday, and I talked about this in the trade talk. If you're a Convergent member, we had our Tuesday trade talk at noon Central, 1 Eastern. If you're a Convergent member and haven't watched it, I recommend that you do. I recommend you never miss a trade talk. There's a lot that's being shared in terms of technique and market knowledge. During the trade talk, I talked about the fact that, I played the 44, so I didn't catch any of this at all. Just to me, it looked like it might be failing. This might be failure right here, might be failing back, and then it would start scenario 1 where we would tag 71.50. So I was looking for a short. 71.50, and then you would hang on tight for a test towards 34. And so what changed that is the fact that we had an impulse higher. Once we had the impulse higher, once we tagged, we got within kind of a spitting distance of this double top from the prior session. Now the one-time framing down is threatened. Now the shorts are likely to get squeezed. And so the trade was a 44.05 long, 44.05 long, and it paid out to 44.09. And then it came all the way back into the range and started consolidating. And to me, it looked like it went to 44.09 and came right back off. And this is where the use of order flow can be detrimental. Order flow is really good for pinpointing entries, but in certain circumstances, it can be misleading. And what it was telling me is this thing falling back into the prior day's range, the way the tape was printing, it just didn't look like the buyers had it. It ended up pulling back beneath my entry at 44.05 to 44.0175, and it exploded upwards into 16. And then from there, I don't have a setup for trading this kind of grind, although I did get long the 26 quarter up here. I don't have very good setups for hanging on to this kind of action, this tight zigzag kind of upward skew kind of action, and then explode up, explode down, come back, zigzag, push up, rotate down, and that's what we saw. Yesterday was a very, very algorithmic. There was a lot of very fast removal of liquidity on the offer, a lift, which didn't really have much delta in it. So if you look at the actual metrics, it was not an orderly rally in my opinion, because, you know, one hint here from this chart, look at your delta. Look at that delta. Just very jagged, just very kind of on crack. And it didn't really go anywhere, despite the fact that we had moved from 43.8675, which corresponds with 0 delta, all the way to 44.47. 44.47. That's 60 points. And the delta was basically around 0 at this point, plus 542. So there wasn't really that much lifting, and we're seeing little spikes. So there was some lifting, but it was immediately refuted with some hitting. And so to me, the tape was incredibly difficult to read and misleading yesterday. And you know what? That's in the cards. I'm not making excuses for the fact that I didn't make anything of yesterday, but it's not my trade. This is, for those of you who have known me a while, I've always talked about this trade being not my trade. This trade occurs about, there's a 1 in 5 chances that we have a day like yesterday. Historically, it's actually usually less. But you know, those days are just not good trading for me at all. I didn't see how, you know, the IB was formed on the run, so we couldn't use that. It stayed well ahead of VWAP, stayed well ahead of the mid. This is the kind of day where I don't have a very good plan for trading it, and so I don't. And the idea is to recognize that despite the movement here, we need to control that FOMO urge and stay in our lane when it comes to trading. Okay, and I know many people caught the long, and many people are shocked that, hey, how could you not see it go up? And boy, I want to watch you trade. I want to see you do it in real time against the hard right edge. But and good for you if your plan makes for the ability to be able to catch these. But these kinds of days where rallies like this are, again, more rare than days where you have an orderly auction that sets up properly. Those are the day in, bread and butter kind of days. And the idea as a trader is to recognize that this isn't our game and to stand aside, which is exactly what I did. So I did my job properly, and that's why I've been here for 22 years. So that's where this stands. So overall, a trend day up, very wide IB. The relative volume was actually pretty high on a 15-minute bracket basis. The relative volume was pretty high. It was pretty strong, and the market really did a good job of continuing the price discovery higher. But overall, if you look at, I'll show you another view of Delta here. If you look at how Delta responded, just a large amount of participation by small lots. This is 1 lots to 9 lots, which were exactly opposed by the large lots, which are 10 lots to 99 lots. This is using Rhythmic's MBO data, very accurate data. So these guys were countering each other. So money was changing hands, or positions were changing hands from 2 different sized participants. The trades were algorithmic, chopped up, and so they fall under the small lot bucket. And then the very large lots, which are 100 lots or 100 lots or higher, really didn't respond until the closing range. So you see them active in the first hour. You see them selling the crap out of this thing on Netflix and then just going home for the session. And since then, this morning, if we look at what we've done today, we've actually been relatively sideways in terms of Delta, and then we had this really strong push in Delta up at 6:25 a.m. this morning, 6:25, 6:30 Central. and we could see that very large lots are quite active this morning. So be careful fading this. We're seeing OTF kind of covering and going to market on a pretty regular basis. You could see that there's a buy program in play here, and I wanted to warn you of that. So what is the overall picture? The overall picture is that we actually consolidated for a while down here. We broke down. We came back into balance. That was Monday, and then yesterday we're testing the opposite side of balance. So we'll look at this on my composite chart here real quick to just make sure we're looking at the big picture and understanding what's going on. So the composite chart shows that we had two distributions. We finished weak a couple weeks ago. Last week we were dead balanced. Monday we opened out of balance, came right back into balance, and then yesterday we traversed from Monday's close all the way across the entire balance, and we went to the 60 that I've been talking about, and we are right up against it now, and we are basically moving into the next balance area. So we have moved above the 66.75 from last week. Very important. Last week's high was poked by one tick yesterday. We've moved across that, and we are now working ourselves through the balance from 3 weeks ago. So you want to pay attention to what happened on these 3 days, the 4th and the 8th. Those become the template days. These are 3 days that have a fair amount of volume, and that volume is really is heavy all the way up to 78, 79, which is where we are today. So we want to see, does it run through there and get us into 4,500? If it gets to 4,500, we're looking for 4,531. Really, this is a very, very clear squeeze that's taking place right now. Okay, so here's the overnight action. You could see we closed up here with a fair amount of volume. We sold off on Netflix. We came back to the point of control of yesterday's session. We basically balanced throughout the Asian session. Again, the Chinese central bank did not do what was expected. Market went sideways mainly. Europe opens. Europe starts squeezing. Some good numbers out of Europe. Europe starts squeezing. We move and we build another distribution against yesterday's high volume node, and now we've moved the point of control to the upper end of the range, the 76.50, and we're holding steady against the upper end of the range. Multi-distribution profile, very clear risk reward on the overnight session profile so far, and we have basically pushed into the 200-day moving average and are resting. So we're going to be opening in a gap and looking at where we go from there. Let's take a look at what's expected for today. The big drop, 3 p.m. CT, that was Netflix. Here's what we're expecting for today. But tomorrow, I'm talking about. I'm going to be giving a talk that is open to everyone. You can join it at go2ct.pro/growing-a-small-account. This is tomorrow at 1 p.m. For convergent trading. We'll be talking about steps you can take to hopefully manage controlled growth of a small trading account. We'll leave you with a checklist, and hopefully we can help those of you who are trading a small account, coming into futures, but also those who are looking to get funded. So what are we looking at here for today? So I've shifted the the magnet up. The magnet now becomes, of course, 4460, right? So this is the area, the magnet area. The magnet area happens to have also the full session mid, full session VWAP. This is going to be an important reference for today. Very important. Any drop into the 4460, we want to watch very carefully. Creates a pretty good trading opportunity, in my opinion. So that'll be the 60 down here. This morning, we're opening in a gap. I'm expecting this thing, because the point of control is at the high, because the high is relatively weak, I'm expecting that it's very likely to squeeze the high very quickly. And then I'm looking for it to come back to the open and test the other side. Remember, the 4460 is a magnet, is a big point of control or balance price. I'm expecting it to come back to this and then eventually drive to the 00 and the 02 up here, and that'll be scenario 1 today. There's not much on the calendar today. This thing's free to move under its own power. But overall, I'm looking for it to break the high, pull back a little bit, potentially fill the gap zone to yesterday's high, which was 67. Remember, that was last week's high at 66.75. So I'm looking for some support here. And then it's likely to drift back up to 4,400, the next key magnet. See, a lot of volume up there. The secondary scenario is a failure of that. Failure of that. So the secondary scenario is an open auction, pokes through. We get an impulse down that takes us very quickly towards that 67, 60, attempts to come back up and is unable, and ends up coming right back into the point of control of yesterday, right into this 50 to 46 area as support before it bounces out and holds steady at 60, and we finish the session around 60, which is in line with about where we closed yesterday. I know I covered a lot today. I'll let you go. Don't forget to sign up for this webinar tomorrow. Again, go to ct.pro/growing-a-small-account. I really need to talk to these guys about reducing the size of these URLs. It's also pinned to the chat. If you go to the top of the chat, you'll see a blue ribbon. Click on that. It's pinned there, and it's in the YouTube description. And it also, if you go to Convergent Trading's Twitter, you'll find it linked there as well. Okay? Good luck, and I'll catch you tomorrow morning. Take care.